Pound sterling to Canadian dollar price prediction, pierces below confirmation level for rising wedge. Pound sterling to Canadian dollar is extending its decline after breaking out of a bearish rising wedge pattern. The pair has already pierced below the October 3rd lows, dashed red line, one of the confirmation levels for the pattern, and is therefore likely to continue lower. The next target to the downside is at 1.7518, the 61.8% extrapolation of the width of the rising wedge at its widest part extrapolated lower. This is the usual technical method for forecasting breakouts. Prior to the breakdown, pound sterling to Canadian dollar broke temporarily above the upper guardrail of the rising wedge pattern on several occasions, blue circles on chart, on September 20th and November 1st. This is a sign of bullish exhaustion and an early warning of impending reversal. Euro to Canadian dollar price analysis, pair fell deeper, approaching last week's lows, indicators deep in negative territory. The euro to Canadian dollar fell by 0.29% on Wednesday, reaching a low of 1.4745, continuing its decline and reaching lows last seen in July. The bearish trend is supported by negative technical indicators, with the Relative Strength Index, RSI, and Moving Average Convergence Divergence, MACD, indicating selling pressure and bearish momentum. The euro to Canadian dollar is in a downtrend after touching a peak of 1.5170. Currently, the pair is approaching the level of 1.4740, where sellers are showing strength. The technical indicators point to heightened selling pressure, with the RSI at 31, near the oversold area, and the MACD red and rising. The euro to Canadian dollar pair continued its downtrend on Wednesday, reaching lows last seen in July. This move was supported by negative technical indicators, such as the RSI and MACD, indicating selling pressure and bearish momentum. The pair might continue to shed more ground as it has room before oversold conditions, but bears might encounter a strong barrier at the 1.4700 area where the pair might encounter a rebound. US dollar to Canadian dollar, CPI has little impact, Scotiabank. The Canadian dollar, CAD, has slipped back somewhat after gains met resistance in the mid-1.3950 area, as expected, Scotiabank's chief FX strategist Sean Osborne notes. CAD rebound stalls around 1.3950. The marginally hotter than expected CPI data for Canada yesterday should tilt risks a bit more squarely towards a 25 BPS cut from the BOC next month. But rates traders are not easily persuaded. Swaps are little changed from pre-CPI indications, pricing in around 33 BPS of cuts for next month, about 30% risk of a 50 BPS move in effect. Wide short-term spreads still represent a significant headwind for the CAD. Spot fair value is estimated at 1.4015 this morning. The USD's positive reaction to the test of support at 1.3950 suggests a minor low at least is in for spot. Price action is mildly USD positive on the short-term charts on the session, and the rebound sustains the broader uptrend in funds in place since late September. The minor dip in the USD has relieved short-term overbought conditions a little, but just enough to facilitate a renewed push higher. Resistance is 1.4040 and 1.41.